No, not yet. Oh, I got it. Is this it? I think I got it. I don't know if this one's correct. I don't know if this one looks a little wonky. Okay, so the one I'm looking at, not confirmed, but 981 million in revenue versus 857 expected. So that's basically $100 million beat. And then loss per share, they lost $1.49. The street thought they would lose 12 cents. That's a really bad EPS miss, probably because of something to do with taxes. I don't think they would actually lose that much money. CoreWeave right here up 2.24%. So now it's getting green. But if the revenue number is right, they beat by 100 million. They beat by 100 million, which is not too bad. Yeah, there it is. Okay, that's the same number I was looking at. Maybe, I don't know if you got it from the same source. I'm pretty sure this one is correct. We should get confirmation soon, but if not, this is number. Yeah, this one feels like the right number. All right, so what you're looking at the screen, this one feels like the correct one. That's what we got on CoreWeave currently right now. That's why it's probably moving up 2% based on that revenue beat of $100 million. D-Local, that's up 4.5%. Iran Energy, that's up about 1.13. eToro is up a little bit after hours. NVIDIA basically flat. Grab 525. We got that on the close. Tesla 347. SMCI up about 1% after hours. Webull was down about 3% on the day. It's up about 0.5% after hours. Nubank had a great day, up 2.7%. They had a pretty decent earnings as well. 40% revenue growth. And CoreWeave, that's the big one. Looks like they beat revenue by 100 million, missed on EPS, and the market likes it. Up 3% right now. And then we had Cisco with a beat on the top and the bottom as well. Okay, cool. So not too bad. Let me see if I can get some more coverage on CoreWeave if we have something here. Okay, we have Cisco. We have Cisco right here. Let me see if we can get CoreWeave, but this is the Cisco earnings.
It was a strong quarter for the networking provider Cisco Systems with adjusted EPS of 96 cents a share on revenues of $14.15 billion, both higher than Wall Street estimates. Q3 gross margins also higher after management actually warned last quarter of a decline due to import duties. The press release that I'm reading right now highlights this 20% product growth, which is great, but Cisco's acquisition of software firm Splunk is actually fully reflected in Q3 results. So if you take out Splunk, products still actually increased 9%, so not bad. And then you have the outlook, the midpoint of their range still higher than the street, along with better than expected gross margins as well. Luckily, I was able to catch up with the CFO just about an hour ago, not even an hour ago, Cisco CFO Scott Herron, and he said that margins improved largely because tariffs changed. And you have the USMCA compliant goods that were imported from Mexico into the US, those were exempted. So all of those two factors really acting as tailwinds for the company. The company also took in $600 million worth of AI orders, an improvement from last quarter. That number was 350, and well past their yearly billion-dollar target. And I have to ask, given the recent layoff announcements, I asked Cisco CFO if we should expect any cost cuttings. He said, no, they are, quote, performing extremely well. We have some good tailwinds with campus refresh. And then he said that they'll manage their way through the tariff scenario once it settles down. Stock up 1%.
All right, Christina, thank you. And I know you.
All right, Cisco, double beat, not too bad for Cisco. Again, I still don't have any more coverage on CoreWeave, but I think if those numbers are correct, then that's why CoreWeave is pumping. They beat on revenue by about 100 million. Stocks up 2% right here. And they missed on EPS a bit more aggressively, but that's probably due to some structural reason for why they missed 12 cents versus 149. That was expected. CoreWeave right here, 69.11 after hours, up 2.65%. There you go. That's what we got on CoreWeave. So that is the big earnings for the day. And that's the one that we got. Again, we had a bigger pump as soon as the numbers came out, but now that they're being digested, up about 2%. NVIDIA is still up a little bit after hours, 135.59. I mean, dude, NVIDIA looks like it wants to get back to 140. My first batch of shares that I bought on NVIDIA were at $139 back in, I think, the end of January. So pretty incredible to see us get back here. We went all the way down to 85 at one point. We were at 95.04. Let me see the year to date. We were at 86.62. That was the absolute low. I think the lowest I got my shares over like 98. But just incredible to see NVIDIA get some of that momentum. Why is Hood down? I think Hood's giving back some of their gains. They were up a lot going into today. Down about 2%, I think, is rather healthy for some of these stocks. Same thing with HIMS. I mean, HIMS pumping to 70 today probably would have been a little bit unhealthy right here. So HIMS right here down 4.45%. Again, a lot of gains have been made in this stock, in a lot of these stocks. Now the question is how many people want to take profits, how many people want to buy in and chase some of these gains. And I think it's very fair for people to take some profits or sell some covered calls against these names as well. SMCI, again, big day for them. They were also up 15%. They're up 1.2% after hours. Wow. So I guess CoreWeave kind of helping them. Microsoft should be up also. Microsoft is up a little bit. CoreWeave, from my understanding, 62% of their revenues come from Microsoft. So they are very dependent on Microsoft. I believe their plans are to increasingly diversify over the next decade, but that is a stock that is heavily pegged towards how Microsoft performs as well, particularly around Azure and AI. D-Lo is getting some momentum. D-Lo right here, D-Local, there you go, 15%. That one is getting some love. Let me see if I can get their numbers. D-Lo, look at that candle, 1190. This one got hit a couple of months ago pretty badly, but it is recovering a little bit right now. D-Local, for those that don't know, is a cross-border payment solutions provider. I think they're headquartered in Latin America. I could be wrong about that. But this one does have a bit of a following on X as well. A lot of people like this name. Just got, a little dicey over the past couple months, but right here up 15% after hours. D-Local, I don't have their numbers yet. I do have Iris Energy, ticker symbol IREN, missed by 27% on EPS, 11 cents versus 15 cents expected. And then on revenue, they also missed by 5%, 141 versus 149 million. That ticker right there, IREN, which is also in the Bitcoin mining space, is up about 1%. They are up about 1%. Uruguay. Okay, cool. Uruguay. That's where they are. Cool. So D-Lo getting some momentum. We're going to see if we can get those results in a bit, but that one getting a bit of a pump here right now. Real quick, let's get a bit of an update on what happened with the White House and Qatar today, and then we will have Sam join the show and get into a deep dive around NEBIUS.
At this point.
Yeah, not a lot, John. We're trying to get to the bottom of it, but President Trump's Middle East tour, has featured quite a bit of deal making along the way, including this announcement that we saw today from Saudi Aramco. It's a new batch of 34 of what it called memoranda of understanding with American companies that have a potential value of approximately $90 billion. And among the deals highlighted were one with Honeywell for technology licensing, one with Aramco's U.S. subsidiary Motiva for a project which the company said was subject to a final investment decision, and a deal with ExxonMobil related to evaluating an upgrade to a refinery. And in Doha today, President Trump announced a large purchase of Boeing aircraft by the Qataris, a deal that was confirmed in a press release from Boeing and Qatar Airlines this afternoon. The two companies said the airline would buy up to 210 wide-body jets, which they said sets a new record as the largest wide-body order for Boeing, including the largest order for 787 Dreamliners and Qatar Airways' largest ever order. Now, we expect the president to continue his overseas trip tomorrow, but a big unknown here is whether he'll take a surprise detour to Turkey on Thursday to attend a Russia-Ukraine summit that's underway there. It's intended to help end the war between those two countries, so that could be a spur-of-the-moment decision.
And then Kevin Hassett, again, White House economic advisor, he said that as soon as Trump comes back, they're going to be ready to announce the next trade deal, which a lot of people are thinking is India, maybe it's Japan, South Korea, but the next trade deal hopefully on the way, and then eventually China coming into the hopefully end of June, if not July, but over the next couple months, we should get some more details with the China trade deal. All right, cool. Let's bring on an analyst that has been part of the YouTube X community. He's not been on the show for about a month now, so happy to get him back onto the show and get some thoughts on what he thinks is going on in the markets and a bit of a deep dive on ticker symbol NBIS. Sam, what's up?
Yes, sir. How are you?
Doing good, man. How are you?
Oh, I bet you're doing good. I bet you're doing good, man. Hood is near all-time highs. Hims is near all-time. Well, actually, you got out of Hims, but it's still all good. Palantir is at all-time highs, man.
Well, you should be doing really good because you bottom ticked Hims and Hood and all these names. So
okay, so I didn't bottom tick Hims, but I near bottom ticked Hood. I was trying to when I saw Hood go below, because this is that Sunday open, right? So when the market just completely gapped down, the sentiment was so bad. And then I was like, wait, I got names I want to buy right now. So like, let me look at Hood. And I saw Hood at $28. I was like, okay, let me put in limit order. And it wouldn't fill. I was like, let me switch to limit order. And then, yeah, I eventually, I got in at well, I didn't get in, but I added a pretty decent size to it at a 30.55. And I was adding on the way down, but that was my largest buy. And then I got in on some leaps. I think it was like 42-ish or something. And the timing was bad with the with those leaps. And then I added more to the leaps after their earnings when it pulled back to like
You're a typical
45,
retail
56 bucks.
investor. You just
Yeah.
keep buying on the way down. That's it.
Yeah.
You know?
No, I mean, you can't time it, right? Like you don't know when the bottom is. And I thought, I mean, I'm going to publicly preface that I thought the bottom was 7% down, right, from the all-time highs. And I was like, this is the bottom, guys. This is the bottom. And the bottom kept bottoming more and dipping more. And it was just like, what can I do here, right? So I'll just keep adding money, whatever to the account, deplete all my cash, like 10% down. But hey, man, here we are. Here we are, the fastest V-shaped recovery in history.
It has been quite incredible. I've got a lot of questions for you. The audience is really excited to hear your thoughts, but I think we'll get into the first topic, which a lot of people are really curious about. This is something that you've been on for a while now. First of all, how do you say this company? How do you say that?
NEBIUS.
NEBIUS. Okay, I've been saying NEBIUS.
NEBIUS.
So
I
NEBIUS.
think it could be. Yeah.
Okay, so I mean, we'll deep dive into this, but as a baseline, what the heck is this company? Why do you think it's developing a bit of a cult following? And then we'll talk about some of the recent updates with this stock.
Well, I mean, it got a lot of exposure. I don't think the general retail population or even most people in the world even knew NEBIUS existed until they saw it on NVIDIA's. I don't know if that's not the 13F, but they saw it on NVIDIA's sheet, right? They saw that NVIDIA bought a stake in NEBIUS. And, we saw the same thing happen with SoundHound. Like the thing gets pumped up, whatever, went all the way to like 50 something dollars, right?
Yep.
Some ridiculous amount. And I knew I wanted to get into it at that time, not just the mere fact that his video was buying into it, because I did some research or whatever, but I just was kind of hesitant. I saw it run. So, I did like some short-term stuff on it, but didn't really build a position yet. And then I started to read up on it. And, I think one of the things that kind of turned me off about it initially was the fact that they used to be called Yandex, which is basically a Russian company. Yandex is pretty much, or at the time, it was basically the Google of Russia, right? It started out as some small project that Arkady Volozh, I'm just going to say the CEO of NEBIUS from now on, because I do not know how to pronounce this guy's name. But anyways, it was a Russian Google, like Josh was saying.
You do not have to worry about pronunciations on this channel.
Okay, cool.
You're okay.
That's right. That's right. This is the home for mispronunciations.
Correct.
But so what happened was that they, the company, they wanted to be listed on the NASDAQ and the stock exchange. And in order to do that, they had to sell all the Russian assets, which is the reason why they got a cash pile position before they raised more capital last December. But they have like a $2.5 billion cash position. And it's not only NEBIUS is the core group that builds data centers around the entire world that are mostly focused on AI technology, but they also have four different investments, or three different subsidiaries in one investment. And one of those investments is a company that a lot of people just heard about recently, called ClickHouse, right? So ClickHouse now has a $6 billion valuation. And this is coming from like a much lower valuation 3 years ago. I'll get a little bit more into those calculations later on, but ClickHouse is basically a competitor to Databricks and also a competitor to Snowflake and so on. Much smaller company by any means, but still, it's a decent sized position. Altimeter actually has stake in ClickHouse as well. I don't know if you read Jam and Balls, Balls and Analyst. Yeah, he's a big advocate for ClickHouse, of course, since they own part of the company. And NEBIUS owns 28% of the company. So if you have a $6 billion valuation, and then you have 28% of the company, you have about $1.5 billion right there, right? So, and that's just a valuation as it stands a week ago. So it might have inflated a bit more as people are trying to buy into it. So then that's just an investment or a minority stake that they have. Now, three other subsidiaries that they have, which are actually part of this company. The first one is Avride, which is like an autonomous unit. And they basically have they're basically like Ubering and food delivery, right? So they're kind of like an Uber. But they actually already have ongoing businesses and contracts with different companies, which includes Uber and Grubhub around the US, but also in Tel Aviv and so on in North Korea. And the company is actually, I would say, probably the closest to profitability out of all the companies is Avride. It isn't a significantly large company, but they're targeting a $52 billion TAM by 2030. So that's pretty decent, right?
And you're saying NEBIUS owns a stake in these guys?
No, NEBIUS owns Avride.
Okay.
They
Got
own a stake in ClickHouse, 28%, but they actually own Avrite. That is part of the company, right? 100% stake in the company, or majority voting power in the company. The next one that a lot of people probably haven't heard of is Triple 10, which is basically like an online training platform that centralizes around AI workloads and building AI apps, APIs, and so on. You know, so kind of like an online university sort of. And the reason why this is a really good look for the company is because, one, it's a very fast growing skill set to have in this current world today, as far as being on the edge of a fourth industrial revolution. But they're targeting $95 billion valuation, and they've expanded pretty far around multiple corporate companies or large companies in the US. And they're planning to accelerate that expansion in Latin America, which is, of course, an emerging market. So if you think about this company, some stats that they release is that they have like 87% job placement after completing some of their courses and stuff, which, you know, is just cool numbers and stuff. But like, still, like, you know, they're in the AI wave, right?
So hold
Now
on, is NEBIUS a holding company for a bunch of these different businesses or something? Like
So
what?
it's like
what
NEBIUS Group. NEBIUS Group is the umbrella, and that's
Got
kind of
it.
what you're buying. And then NEBIUS is the core business, which is technically speaking like one of the four businesses. But
And what is that core business exactly?
NEBIUS. Oh, that's the AI data center. I'm
AI
gonna get
data
there. I'm gonna get there. It's a deep dive. I got to dive into each of the segments, but I'll get to the exciting stuff in a second. I just want to make sure everyone understands like what this company does and everything. The last one that everyone has probably heard of is Toloka. Or the second to last one is Toloka. Toloka is basically like an outsourcing group of a bunch of engineers that build AI workloads for a bunch of companies. And this is the one that Jeff Bezos got in on recently. And the CTO of Shopify joined the board of directors on it. Now he's the executive chair of it. This is getting some serious backing, considering that they could potentially offer services to a lot of these mega cap companies, but including other companies and engineers. And their target is $17 billion TAM by 2030. I think that's kind of undershooting it. I think it's going to be a lot more than that, considering that they're getting a lot of eyes from Bezos, as well as CTO Shopify and other venture capitalists. And about 80% of the revenue comes from generative AI clients. So we haven't even touched agentic AI when it comes to that. And that's actually what they're going to be targeting in the future, right? So,
And does NEBIUS own 100% of Toloka, or
this is part of the business. Yeah, it is 100%. So the only one that they own stake in is ClickHouse, and they own the minority stake of 28%. The other ones, like, they own these businesses, and it's under NEBIUS, period. Now, the core business that I want to get into and what everyone's excited to hear about is NEBIUS. NEBIUS builds data centers, right? And they don't just rent real estate from these data center places and just build this, that. Like they've had experience with this for the last 2 decades, doing it in Russia with Yandex, being the Google of Russia. And now they're doing it around the entire world after liquidating all of their Russian assets. So then that way they can actually sell and meet whatever compliance that they need to have in order to be listed on NASDAQ. And they're building data centers in the US, and they're building data centers in Europe. And the reason why I find this pretty interesting is, one, they're growing at 462. The company itself is growing at 462% year over year. And last quarter, they came in at 117.5 million. Sorry, 37.9 million. But for the entire year, they came in at 117.5 million. They're targeting ARR from 750 million to $1 billion for just this year. And they're already on pace for that, being that in their last earnings for last year, they guided for, well, they didn't guide, but they said that up to March, they're already at $220 million ARR. So they already reached 1 quarter of it by March. So then they're a bit ahead, and they're expected to ramp up throughout the entire year. So I do expect them to meet that and probably beat it. But that's going to be like what everyone's going to be looking at this quarter, because they come out with their earnings, I believe, next week. And that's the one everyone's going to be looking at, the ARR. Is it ramping up, and is it up and to the right? So that's the important part. So that's a $260 billion TAM by 2030. The company's worth $8 billion right now, or probably $8.5 billion. They own 28% stake in ClickHouse, which is a $6 billion company. So that's $1.5 billion. They have $2.5 billion in their balance sheet. So that's $4 billion. So half of the company is in cash right now with no debt. But AI infrastructure is expensive to invest in, as you already know. So they're expected to spend, I think, about $1 billion in CapEx this year. probably going to be more than that. And they're expecting to raise more capital. So you can't come into this saying like, oh, they're not going to raise more capital. Like if they make an announcement that they're raising more capital, like that should not be a surprise.
Right.
In fact, the CEO has said that in multiple interviews, but they have experience doing this and they're never going to compete with AWS, Google, GCP, or Azure, whatever, but they just need a small piece of that cake. And the benefit of being a smaller hyperscaler is that they can actually accommodate to specific needs of clients versus like, hey, this is what we got. So, you know, just deal with it, right? They can accommodate to these, but also they specialize in certain AI workloads that are very important to a lot of clients around the entire world. However, most of their clients are in the US, but they do have that ex-US risk alleviated by building data centers in Finland, in Paris. I don't know if they're building data centers in Asia right now, but they're probably going to be targeting doing that soon. So if you think about all the things that has been happening with the sovereign funds coming in yesterday, or at least announced yesterday, with Trump being in Saudi Arabia, who is the beneficiary of this, right? Obviously, you're going to have the hyperscalers, but if they need to build a data center in Europe and they want to tap a different company, NEBIUS could be that company. And I'm not saying it's going to happen. I'm just saying, like, if everyone's getting a piece of the pie and the piece of pie is looking pretty good as opposed to where it was a few weeks ago, this is the reason why the company's getting a bidding. But also it has a news catalyst of Bezos investing them and so on. You know, so I wouldn't say that this is something that is probably, I would say this is something that's in much better place than where it was when I first started buying it at like $28 on the way down.
If you know, what makes NEBIUS different from CoreWeave?
So CoreWeave, they rent out GPUs as a service. So they're not necessarily doing the full stack. NEBIUS is doing the full stack. They're not just doing GPUs. And CoreWeave is, you're mostly renting, you're mostly rendering the compute when it comes to specific AI workloads. NEBIUS does that, but like since they have the full stack, they can really run anything in their data centers. And on top of that, CoreWeave isn't actually building these data centers. They're kind of renting them and then being like the intermediary to rent that compute that they're renting out to companies that want to use AI workloads. NEBIUS is doing like the full stack. They're building this stuff on their own. They have experience doing it and they're going to continue doing it. And there's a few interviews with the CEO and like, you know,
let's play one of these clips right now. So this is the CEO. For those that have never heard him, I've never heard him as well, but here is the CEO of NEBIUS.
And we have the product now, and we have the data centers, and we're building very fast the new ones. That's the first pillar. The second pillar, we have enough of capital. And in this new market, there's not so many independent companies who have money to build this. We have a couple of $billions with us. It's not the 31 billion, which it was in the past, but still a couple of $1 billion to start with. We raised some more from NVIDIA and several dozen of investment funds, including Excel. So we have the second leg, the second pillar, which is the capital, which allows us to build a lot of these new data centers. And we already have built some last year and continue building very fast this year. It will be hundreds of megawatts of data centers, and in 2026, we're ready to build a gigawatt and more, providing there will be a demand.
Okay, so you like this guy? You can trust him? What do you think about this guy?
You know, that's like the only, I would say that's the biggest risk factor in this, the fact that he used to be Russian.
Your mic is crazy. Was that just me or was that everybody else?
How am I sounding now?
Oh, it's horrible, dude. I think you just switched your mic. that wasn't just me, right? Oh, wait, hold on. Okay, try talking now.
Testing 1, 2, 3.
I don't know why it sounds crazy. All right, go ahead. I'm just gonna try to adjust on my that's so weird.
All right.
That's really
so bad. There's probably some skepticism with a lot of people because they used to be Yandex, which is a Russian company, and most of the board of directors are Russian, right? Or they come from a Russian background, but a lot of them have the degrees from the US, right? So you're never gonna discount that. Right, that it used to be a Russian company, but they intentionally sold off all their assets so that they could be listed on the US stock exchange. And they already are working on building these data centers in Europe and the US. So this is another thing that you got to kind of factor in when you're buying into a company like this, because this is a risk, right? Do you trust them or do you not trust them? For me, of course, I trust them, right? Like they have a lot of they have NVIDIA backing, and they have a backing from Bezos as far as subsidiary goes, and like they're de-risking their portfolio by having these other businesses that are contributing their bottom line into NEBIUS. Like ultimately, these other 3 businesses that they own is there to fuel NEBIUS. That is their baby, right? So if you kind of think about that as far as where they're going for these other businesses, maybe it might help build that conviction, along with, of course, your own DD, that this might be a beneficiary of this entire thing. Wow, CoreWeave is up 8% after hours. It's pretty crazy. NEBIUS is up 2.4% after hours. So,
someone's talking about NEBIUS right now. I don't know who it is. But.
I know someone talking about NEBIUS. How many people got in the audience? We got 4,100 people in the audience. I don't know. Maybe I'm pumping up NEBIUS right now. Let's go. Hold on. Let me hit the sub button. I'm just kidding around. I'm not gonna pull a SoftBank on you guys. All right. I'm not looking to liquidate my capital. In fact, my capital is probably a grain of salt compared to everyone. Jeez, that thing is ripping.
That's up 3%. But okay, so here's the broader question, right? Why are you so excited? Like, what's the kind of 30-second, like, man, this is an opportunity people really should take seriously?
Because look at all these mega companies putting money into building data centers. We're literally on the cusp of just the world changing in front of our eyes, and we've already seen things massively change. You saw those videos with Optimus, right? Like, that's pretty crazy. Optimus is doing those dances and stuff, and like we're just doing that right now. And what do you think drives all of this compute to run all of these algorithms and formulas and whatever? You need compute, right? And which of these companies, besides the hyperscalers, okay, obviously hyperscalers, Oracle, and so on, they're expanding very quickly. But which of these companies has a specific niche for everything that's happening versus like, hey, I just need to spin up a server to host some security thing, right? Like NEBIUS is building the entire stack and specifically geared toward what is the largest secular trend right now when it comes to AI, right? And they're doing it around the entire world. They're not just focused on a certain region. And on top of that, as far as a balance sheet perspective goes, their balance sheet is very clean. And on top of that, if NVIDIA is going to be at, let's say, $200, where do you, I guess in this case, it's like more of a correlation play when it comes to just not knowing the facts about the company. You know, like obviously CoreWeave is going to benefit off this, obviously, and NEBIUS is going to benefit off this. But which one has the most amount of upside when it comes to the hyperscalers or the companies that own the hyperscalers versus NEBIUS, which is like a pure played AI data center? I think NEBIUS is definitely the one that's going to be the most beneficiary. On top of that, it is continuing to have great news that comes out every single week, especially when it comes backing from major organizations around the entire world. And it's kind of giving that, I don't know how to say this. It's getting that backing from Bezos, Shopify, or the CTO of Shopify, as well as NVIDIA. It's like, doesn't really sound like a pump and dump to me, right? Like if it was, if they were skeptical, they would not take part in this or even put their name on it. Like Bezos Expeditions. Okay. So there's probably been things that they've invested in that pretty much didn't do well at all. But you have a company that's already building and already has these massive data centers around the entire world and continuing to build data center in New Jersey, in central US, in Paris. Like they're doing it to accommodate or to address a demand that we have not seen yet or that is coming, right? And they are meeting that demand. That's the difference between the hyperscalers that AWS says, Andy Jassy says all the time in the conference calls, as well as other hyperscalers, that they need to build this to meet that demand. NEBIUS is meeting the demand, and they expect the demand to grow and continuing to meet that, which means that they're getting like a full 100% of what could come through the door or what comes through their door.
So I think the way to summarize it is, number one, data centers are growing, and NEBIUS is going to be one of the pivotal players that are there. By the way, guys, CoreWeave up 11%. I think that's also, as much as I love Sam, I think that's also pumping NEBIUS up 3% and NVIDIA up almost 1%.
Probably.
Right here. Is probably also Sam as well. But so you got data center growth. It's trading at 50% cash. So it's relatively cheap if you believe that they can effectively utilize their cash. And then you have the big names like an NVIDIA, Shopify CTO, Bezos, saying that they want to invest as well. And I guess the fourth thing right here is that they're a holding company of other businesses besides data center, which kind of you're getting more than what you just pay for. But here's my question here. Why the hell do they care about like the Uber DoorDash type of a business or the ClickHouse software? Like, why do they care about that? Why aren't they just focused on data centers?
Well, it's all centralized around these workloads, around the AI workloads. Like it's all centralized around that, and they're all kind of there just to fuel the core data center thesis because that's what they did in the past, and that's what they're good at. They've done it for more than a few decades, and that's what the CEO is good at. So this is what they want to do, but at the same time, they have these other businesses that have much more potential and less capex overhead requirement to become profitable, to be able to fuel this core business of NEBIUS and building data centers. Like, let's be honest, NEBIUS data centers, they're burning cash, right? They're going to raise more capital, and the profitability expectation for them is probably not until the end of the decade, right? But to be realistic, though, these other businesses, and especially Avride, could be profitable or EBITDA profitable by the end of the year or even early next year, which will continue to serve the operating costs of NEBIUS itself. So it's kind of like a strategic play of managing multiple companies to be able to fuel the core business. But on top of that, leveraging additional investments, which includes ClickHouse, to be able to have stake and build onto that. I wouldn't say liquid cash, but also like a long-term asset per se, to reduce the risk of being successful with just one business unit, but it's spread across 5 different business units.
Right. That makes a lot of sense. That actually makes a lot of sense on why they have a bunch of different companies inside of the holding company. It's a hell of a pitch. It's a hell of an argument. When did you start buying NEBIUS?
Worst time ever, probably like early March. As I was going down, and made my largest buys in the low 20s. And right now my average is about $24. So I'm sitting on something pretty good right now. And it's got momentum with it too. I mean, like it is definitely a momentum gainer. And I mean, I've been talking about this a lot also on Chris's Patreon, which, I think I brought it up many times on some of those Patreon live pods. But I mean, if you think about it, like Chris is in SMCI, everyone is pretty much bullish NVIDIA and so on. That was quite an opportunity we got in the last few weeks, right? So if this is going to come back in terms of its valuation, this is going to come back hard. And it has. It's up like almost 100% since it hit its lows at $18. Right. So the momentum is definitely there. Plus you have CoreWeave 10% up after hours, and NEBIUS is up 3% after hours, right? Like, so it has the momentum play. So it kind of attracts traders as well. And plus it's $8 billion in market cap. So this thing's going to be volatile, right? So my thing is that I actually have covered calls on it that expire in the next couple of weeks. So I think that it's possible to sell cover calls on part of my shares and be able to create like, some extra, I don't want to say income, but like some extra alpha there, because it has run pretty strong, like 50% in the last couple of weeks. So, trying to play it that way. And if I'll probably roll if it hits my strike price, but like my strike price is at $45. So, and that expires at the end of the month. So, I'm playing it pretty safe because this thing could probably run. It was just at like $55 like a few months ago, right? So I didn't buy it before it went there. I bought it after it went there, not expecting it to go back up there, but just keeping an eye on the technicals. This is a much smaller company than playing like some of the mega caps and stuff. So
do you like the price right now, or would you wait for a pullback to get in some of them?
I think, for me, like this wasn't even a big position when I first got in, probably more like a 1.5% position. Like I'm not someone who like goes like full port or even like 10%, 15% on a certain company other than like a mega cap or something. Even then, like I'm very risk averse when it comes to that. So would I buy now? I'd probably, if I wanted to have like a 1% position, 1.5% position right now, I'd probably divide it up into like maybe 6 weeks, and like every week just like continue adding like a sixth of the size until I build a full position. Because we don't know if this is going to top out here for now or if it's going to keep running. So if you don't really want to time it, that's probably the best approach to building a position. But especially if it's like 1.5%, for a lot of people, it's just like, whatever, let me just buy the whole thing now and just hold it. So it really depends on your time frame. But I would say that for me, I would even buy here, or I'd wait for a little bit for a pullback or something, just to like buy in a little bit and like continue edging in. But for a position like this, where something gets like a long-term position, like I want to see this thing play out, right? Then I wouldn't really be so concerned with where the price is right now. At the same time, it's like if you buy in right now and it falls back to $28, like you can't be upset.
Correct.
Right.
Yeah, especially with the market running the way it is. I mean, you have to be careful with getting into these high momentum names. Okay, last question on NEBIUS, then I'm gonna get your thoughts on a lot of other stuff in the market. By the way, guys, Sam's Twitter, he does a great job on Twitter, really getting into content more. So please make sure to follow him right here. He's about 70 followers away from 9,000 on X. So it would be awesome if you guys can check him out there on X. The
70 followers away from. Oh, okay. I was like, I think you're gonna say 10,000. Also, you know, I'm very active with Chris on the Hidden Edge pod. So we're supposed to be having an episode sometime soon, but we're really focusing on the group for now to bring value to subscribers first. But yeah, I would say, I mean, we're always shooting stuff that those guys are awesome. I think the people in here are also the same type of humor as well. So I'm not gonna discount that. Like when you said Uruguay, like your chat went crazy.
Oh, I already knew what they were gonna say. Oh, you're a gay. Like I knew it.
Yeah,
like I didn't even
I knew it was gonna happen.
There's that Hidden Edge podcast. You guys can subscribe right there. Okay, Sam, last question here. The Russia thing. Is there any risk at all with Russia and the Russian founder and ties to Russia geopolitically? Do you worry about that at all? Or you're just like,
No, they sold off all their assets. I think there would be a compliance issue if NVIDIA was investing in them, or if Bezos was investing, because he's technically investing in NEBIUS, right? Or Shopify CTO. Like if these big names are really buying it up, like I would assume that risk dissipated. Like I'm not a lawyer, right? So I don't know exactly. But that's the reason why for my position size, so my initial position size is to account for this risk, right? So a 1.5 position, like that's how much my portfolio moved in one day. So it wouldn't be the worst thing in the world. However, to think about the potential for this, like it could probably be, I don't know, man. In terms of valuation, my expected fair value for this company is $57. So that's based off a lot of assumptions with expected free cash flow coming in, as well as CapEx coming in, which is going to eventually contribute to the top line. So I'm thinking at least near a double from here, probably in the next couple of years. And that's a bit aggressive, but I definitely think it'll get there as long as the market stays bullish. I mean, we came from really crappy sentiment, right? So yeah, and yeah, that's right. Chris is right. Like I'm also bullish on Grab too. And look, the thing is already near those highs where like people got scared about it, right?
Yeah, no, we're gonna talk about Grab. We're gonna talk about that.
Oh yeah. Oh yeah.
Okay, cool. So that is your thesis on NEBIUS. So cool. By the way, guys, his Substack right here, you guys can subscribe to that as well. This is a deep dive. He actually wrote it out. Basically,
I just did today.
So yeah, this is another way you guys can get more access to the content right here as well.
Yeah, if you are not a video person, I'm more of a visual person, but everything I talked about today is in this article I just wrote up today. So I would say go ahead and check it out. And I have other articles in there where I talked about the Google, how is Google search dead and so on. I address a lot of macro. And yeah, I mean, this is just basically like a newsletter that I just have in Substack. So, you know, you don't have to pay anything to do this one.
Okay, let's talk Grabby Grab. You were the first person that introduced me to this stock, really piqued my interest. It was up about 5% of the day, broke above 520. What are your current thoughts on Grab? And do you think we break through that $7-8 range maybe by the end of the year? What do you think about this?
You know, it's so tough for me to increase my target by beginning of 2027, which is I think it was like $7 and change, like low sevens. But just seeing that the market's coming back, I would not be surprised if this thing is at $8 by 2027, which would be great news for my calls. But at the same time, you know, we do need to stay vigilant. However, you know, if you look at how much they're up how much are they up year to date? Probably up a lot.
I think it's like less than 10% year to date. No, 10%.
Oh, really? Okay, so they're beating the market right now. They do have that risk, and I think the biggest story since the last time I came here was that GoTo merger, right? So acquisition, the thing that's not happening, but we all know that it is happening, and I don't think people understand how bullish this is for Grab, right? So Grab in Indonesia, their number one competitor. It is literally Grab or GoTo in Indonesia, right? I haven't been there personally, but that's what I'm hearing, right? So if you take that competition out in Indonesia, which is their largest market and the largest GDP in Southeast Asia and one of the fastest growing, what do you think that's going to do to their top line? What do you think that's going to do to their presence, just their branding presence? The fact that you no longer see go-to anymore, you just see Grab. It's like looking outside and seeing all those Amazon trucks. How are you not bullish Amazon? You know, I'm not asking you, I'm saying like in general, like you see this name everywhere. And on top of that, they're still running at 1/3 of the market caps in cash, which they increased last quarter, right? And on top of that, they also have the financial segment, right? Which is growing pretty strong right now too. Like I don't really know how to explain it, man. Is Amazon my largest position still? It is still my largest position, but I think Mercado Libre is heading toward number 1 soon. Mercado Libre has been great. Anyways, I just think that's like, it just fuels my bullishness for the company. And it makes me actually pretty excited to know that you and I are going to be taking a private jet over there to talk to him. Nah, just kidding around. I wish we were going to meet Anthony Tan. That would be freaking awesome. But
some common concerns are they don't have a moat, they don't have pricing power. It's like it's a super app concept isn't cool. Like, how do you reconcile all of those concerns?
Well, the way I reconcile those concerns is like, who is their competitor when it comes to the entire region? It was GoTo as far as a presence in Indonesia, but besides that, they're gonna gobble them up. So like, who is their competitor? What is their moat? Well, their moat is that they basically have no competitor out there, but also they're probably they have Uber. That's tight. Uber owns a 25% stake in Grab, right? So you think Uber is just going to sit around, right? And everyone thought Uber was dead, you know, like a few months ago. Look, Uber's at an all-time high right now, right? So if you take the valuation that we gave Grab, fair value at the time for Uber versus Grab, right? It would have said that, oh, Grab is at fair value, but now Uber is 50% higher. So what do you think that does to Grab? You got to compare to that valuation. Plus the fact you got to add in that they're going to have like virtually no competition soon, right? And on top of that, they also have a fintech arm that's growing pretty strong too, right? And that isn't profitable yet. Imagine what happens when that becomes profitable. Just imagine what happens.
I think it's pretty exciting, dude. And I think the from a technical perspective, it's had a 4-year consolidation. Every analyst has a 650 target, 6 billion in cash. EV to EBITDA multiples look incredibly attractive. I mean, when you really think, you and I did not think GoTo was happening. I mean, I don't think you and I, when we were talking in November, were like, oh, they're going to acquire GoTo.
It was like, but like now there's like so much hush hush being put out there. It's like, you know, not like, it's like, don't follow what the Fed does, just follow what they say. And it's like the same thing. Like Peter Oye, the CFO, like he didn't say he wasn't going, they're not going to buy GoTo, but they're doing everything to make that happen right now. Like you're seeing everything that's happening with that.
Yeah, I agree. I think this run today was probably more institutional. Retail does not know about the name. If it gets to 657, they're probably going to get interested. And by then, there's an 83% float that is covered by the toots. So I don't think the toots are not going to be chasing it. They're loaded up.
Dude, click on the weekly chart for Grab and then zoom out. No, that's a 5-day chart. All the way to the right, over there.
Oh, there it is.
Yeah. So zoom out. Okay. There's the cup. No, zoom in. Sorry, zoom out. More. Okay. There's the cup. And then what's that little piece over there?
The handle.
The handle, baby. That is your setup. That is your technical setup right there. That is a very high probability of success. A cup and handle.
Well, a cup and handle with a company that's founder driven and now
buybacks.
Profitable, highest adjusted EBITDA ever, free cash flow positive. I mean, every metric is going up and to the right except the stock, which is when you have to take a bet with the market on, do you think you have the ability to make a call on this name before the market gets it? And it seems like that might be happening right now with Grab. So there you go. Okay, so we talked. That's a Grab. HIMS. What the hell's going on with this?
I don't know. I trimmed a little bit and I got a covered call now, which is paying ridiculous premium. So I'm not looking to get out. I'm only short calls for half my position. And yeah, the premium is insane right now. So I don't mind selling half my position at $70 right now. And that expires next week. So you know, it's insane. You know, is the company still undervalued? I think given the risk and everything in its value, I think it's about fair value right now. as far as his historical valuation, but it is pretty exciting though. It is pretty exciting to hear the story play, but I think it's getting a little extended right now. So, I don't mind taking some profits here.
Why are people shorting HIMS as much as they're shorting it right now?
I have to be honest. I think it's a lot of the risk that's involved with the company. I think it also has a lot to do with the fact on the technicals as well. But to the degree of having 33% short interest is just weird. It's like, what are you guys doing? Like this is setting up for another GameStop per se, right? Like, because the shorts are not covering, they're increasing. So that's kind of what happened with GameStop. And I don't know if there's a hedge fund out there that's publicly saying that they're short HIMS besides Paul Coelho. But it just kind of makes you think like this thing can run, like it can really run. And I'm not going to try to be a genius and try to time that. I'm going to take some off the table right now.
By the way, NEBIUS up 5%.
Yeah, it's up 5% after hours. It's crazy, man.
Do you think HIMS is a bull trap right now?
Like, what do you mean by I saw that. I saw it out there, but like bull trap isn't like you're going to lose your money tomorrow, or bull trap isn't you're going to lose over time.
As in, if return, it's going back to 35 and I should wait.
I honestly think that a lot of people, or the general consensus is that it's very extended right now and that's going to pull back. So I think there's some profit taking happening right now, which is the reason why you're not seeing it dump, right? But it literally just waiting for that one catalyst for it to dump. But Bank of America has been bearish HIMS for quite some time, and they've continued to have their low price targets, and the market doesn't care anymore, right? I don't know if you remember when HIMS was like $34 or something, Bank of America came out with a price target of $20 and things dropped like 6-7%. Well, they came out with a downgrade, or not a down. They actually raised their price target, but like it's still a low ball price target, and the stock didn't care, right? So you tell me, like, do people necessarily care, or do buyers necessarily care about the analysts being bearish this company, right? It's literally like a retail versus dumb money versus smart money scenario they have here. And my perspective, I would not be surprised if this goes to freaking 100 in like the next couple of months, maybe sooner. I'm not saying it will. I'm just saying I wouldn't be surprised if that happens, man. Like you're literally setting up for it.
Yeah, and when I looked at the numbers as well, I don't have a position. I bought at 28, sold at 40. I didn't expect this type of a run, but I can't see the red flag outside of no moat, which I think there is somewhat of a moat, even if it's not a like really, really hardcore defensible moat, but that can't be the reason for a 33% short.
I think there is a strong moat with the company, in my opinion. I don't think that this has no moat. When you look at their personalization subscribers, that thing is growing very quickly. Okay. But if you think of Amazon, if they were to get into this business, which they are trying to, how much personalization do you have in Amazon? There is like no personalization in Amazon. Like if you go on Amazon, it just knows you based on what you've clicked on, but it doesn't necessarily know what you like. It's never asking you these questions. When you go on HIMS, it asks you questions about yourself, and it gives you that targeted medication that you do need, or that it's trying to give to you.
To be fair, Amazon could give you a little questionnaire and ask you questions. I mean, I don't think that's the hardest.
I've never seen it before with Amazon. And if they did, they don't already have that data. I think the thing with HIMS is that they have so much data on people that in order to not utilize that would be selling themselves short. And I'm pretty sure Dotum is utilizing that data, which is the most important thing about pretty much any company out there. You want to have that data. I mean, that's what's really driving this world, to be honest.
I agree, but I also think, first of all, I disagree. Amazon has a lot of data on all of us. Like we buy shit, right?
Health data.
A new mattress, they know, hey, you might be moving out, right? So like they have data. I agree with you that HIMS has a personalization moat. I don't know how defensible that moat is at all. And I've never really deep dived into them, but I do think someone could come up and say, hey, we can help personalize your medical experience. But I do think HIMS' brand and their marketing, which is a high marketing spend, has been giving them a first mover advantage. The question is that sustainable for the next 5 years? But he has a $6 billion target in revenue, right? So,
well, one thing to be, aware of is that they did do a recent offering to raise more capital for AI investments. So, there is that. So obviously, whatever cash they have in their balance sheet is not going to be enough for whatever they plan. Marketing expenses, actually, it's not. I don't think that grew as fast as revenue last quarter. So technically speaking, marketing as a percentage of revenue is actually decreasing, right? But the question is, are they still going to sustain triple-digit growth? Probably not. But one thing to keep an eye on is that marketing, right? So they do have that brand presence. Like there's other smaller companies out there that are similar to him, but it's like you never even heard of them unless you Google them, right? When it comes to Amazon, yes, they might get into this, but the thing is that Amazon will try to utilize its third-party service or third-party sellers to be able to push their own products, which is similar to what Hims does, because Hims isn't actually making their own medicine other than through partners, right? So in a sense, Amazon could come in and take some of the cake, but I think this is a secular trend when it comes to buying pharmaceutical products online. Like even Kaiser is trying to get in this, which they actually are. Kaiser Permanente is a private medical institution, and they also have a pharmacy as well. And they're trying to get into this, but when you use their application, it's like so choppy, you know, like I guess like that's just the software person inside of me, is that's something I always look out for, customer support as well as innovative software. And Hims is actually, it kind of reminds me of Robinhood, how good the application is, how responsive the customer support is. Hims is in that category as well. I've heard a lot of complaints about the Amazon software and the response and whatever, but like I think that kind of customer obsession is really what's going to drive most of the expansion ahead. If people like you, they're going to stay with you.
Right. Well, speaking of Hood, let's get some thoughts on that. You decided to really join this party. What is your take on Hood as a technology company right now?
I think as technology, I use it for one thing. I've used it for 5 years now, since 2018, 19. And it's gotten a lot better. I thought it was good back then. It's gotten a lot better. It's got a lot more versatile. And I honestly, seeing all the news about them coming to Canada, you know, expanding more into Europe, the UK, and so on, I think the show's just getting started. I think it's great to be part of something that's really gaining like a lot of exposure to the outside world. But you also have a CEO. You also have Vlad that's like really putting himself out there, right? So that's always good to see when you think of exposure or brand awareness to the company. They're definitely targeting business from Charles Schwab and some of the major investment companies, right? So I think that you don't need a lot of what they have in order to gain a lot of upside. But at the same time, one thing to be concerned about is that like they're not letting it happen, right? Like Charles Schwab is trying to build a much better app by acquiring Thinkorswim or a TD Ameritrade, right? So they're definitely trying to compete, but it's like, how do you compete with someone that's already like 5 miles ahead of you? It's very difficult to, right? So if you just slowly start to take market shares from these other companies over time, it'll grow in itself. And on top of that, I mean, that the Lost City of Gold, I didn't attend it, but they announced like a lot of cool features, and it's probably not going to stop there either. Like they're going to continue to innovate and build upon the company. I've always said on Twitter, you've seen that I've always talked about how Vlad is like a great product management, right? He has excellent product management skills, and on top of that, the support in Robinhood is pretty good in my opinion. So like you mix that customer obsession with product innovation, I think you got a really good recipe there.
Okay, let's do some rapid fire questions for Sam. I have some other questions as well, but I want to get to some questions in the chat, and then we'll get him out of here in the next 10 minutes. SoFi, Sam, thoughts on that company?
I mean, I think they're going to do great, but honestly, I used to have SoFi, and of course, I sold right before they popped. But I think the question that really comes, I don't want to get into the whole Hood versus SoFi situation, but it's a very competitive space. Being in banking in the US, but they do have the advantage of not having a physical location, similar to Nubank, right? But Nubank is not in the US yet. But I think SoFi is going to do well. I think Wall Street just hates SoFi. I think that's just all it is.
So you don't have a position right now in SoFi?
No.
Okay. What is your current Mag 7 exposure in the portfolio?
I got Amazon, and I built a pretty decent position in Meta.
Wow. Okay. Amazon and Meta. No NVIDIA. Why not?
I think there's a lot of other data center plays that can really grow from there.
What is that?
Sorry. I think there's a lot of other data center plays that can really grow from there. Like I have a pretty decent sized position in Marvell, Astera Labs as well, NEBIUS, and I think a couple of other, I can't really think of off the top of my head.
If you're so bullish data centers, why would you not buy NVIDIA?
Opportunity cost. I think there's a lot more upside with these other companies that I own versus NVIDIA. And the reason why is because well, Astera Labs bounced from the high 40s. Now it's at $90. Marvell bounced from the 40s. Now it's at $65, right? So, and I think there's a lot more upside with Marvell for a catch-up play. NEBIUS already pretty much doubled since the bottom. Like it's not so much that I don't think NVIDIA is going to, like NVIDIA is always going to, I think NVIDIA is going to be the largest company in the world again. But consistently, I think it's going to be Amazon, of course. But yeah, like when it comes to data center, I specifically look for like certain secular trends, and I look for like what's in there. Like since DataSeek, it's really been just about network throughput. So that's why I threw a lot of money at Astera Labs and Marvell.
It's interesting because you're not the first person to say this to me. They're like, someone's super bullish about data centers, but they don't do NVIDIA. And I'm like, but none of that stuff happens unless NVIDIA has more demand, which means either you hate the valuation on NVIDIA or you just like the other plays more, which is fair. But the valuation on NVIDIA is a joke still compared to some of these other names, right? It's not like it's expensive. I don't think anyone is.
Yeah, NVIDIA is certainly not expensive, but these other companies that I own from a long-term perspective, they're not expensive either. And they're much cheaper than NVIDIA, in my opinion. Today, I don't know. A-Lab's been running a lot lately, and they're still burning cash, so I can't really say that. Marvell is already a profitable business, right? But I think they have a lot more upside than NVIDIA. Like, how can a $3 trillion company double in like the next couple of years? Probably not. Can these companies? They have a much better likelihood, and it's all about opportunity cost at this point.
Right. Snowflake. Do you still own this one?
I still own Snowflake.
Are you bullish?
Of course, I'm bullish.
Do you wish you owned Palantir instead?
Yeah, I did. I wish I owned Palantir instead. There was a point when I owned both and Palantir was as big as Snowflake. And yeah, I should have not sold Palantir in the mid 40s, but it is what it is, man. I mean, I play the short-term stuff in Palantir here and there. I think I had some calls I bought on Palantir yesterday before they popped, and it was more of a trend following trade, and it paid off, and I got out, right? Like I just do those randomly when it comes to Palantir. I'm never going to own this company again. I can't buy it here and not think that I could get it at a better price in the future. So that's when I say a better price, I mean like 10% down. I mean, like, I think Palantir might be in like the mid double digits at some point. I just don't know when. But it doesn't mean I'm bearish Palantir. I think if the market stays bullish, it's going to stay up here. But if the market gets bearish, which we just seen, it's going to hit $72 again and then bounce back when it gets bullish.
Okay. Tessie, do you have exposure to this one?
No, I don't. But shout out to Raj. That guy is buying the dip hard with Tesla. And I thought about it and I just didn't. It doesn't run on valuation. It runs off fundamental and expectation. It's very hard to value a company that far out without doing that, unless it's a small position. But if I were to own Tesla, which I have in the past, like I would make that 5%, just not here. And when the market was falling apart, it was very hard to even look at its values and come up with some sort of upside in terms of a discounted cash flow metric, or whatever.
No, that's fair, dude. When the market was crashing, it was really hard to say, hey, Tesla at 220 is a good deal, given, like, again, if you look at kind of pure valuation metrics, it's not. But do you think this is just all hype, or is there any level of truth to FSD and robotics that the market is pulling forward right now?
I think it's hype. I think it's just very difficult to say that it's because of robotics and FSD, because that was the same case when it was at 220. So why is it here? Like nothing changed other than a few videos on Twitter and him going to Saudi Arabia. Nothing changed, right? So it is hype because they continue to post very crappy earnings. So if no one is buying Tesla for its current car business. No one is. They're buying it for the future. And Tesla will be a very large company in the future. They just haven't shown that profitability or revenue, pulling in the revenue ahead at this current moment. So it's pretty tough to say.
AMD, any thoughts on that?
I don't know. Kudos to those people that are buying the dip on that one. I mean, they deserve it. I feel so bad for like people who are buying this like 150 and down, because it even looked like a good deal, the 150 coming from 225. But I think this thing's going to make a new all-time high probably this year if the market stays bullish.
Okay, and then let's talk about this one for a second, because I think you are a bit conflicted in terms of how you're navigating it. But Google, what are you doing here?
I don't want to say, but I had to think pretty hard about this one, and I've already made my decision, and I already did it.
That sounds like you sold. You might as well say it, bro. It sounds like you're out.
I sold Google. And I put it into Meta.
Wow. You went from
So it's not because I don't think Google is going to go anywhere. It certainly will. Like, it's up 4% since I sold it, and I'm not going to. Okay, well, I do look at like Meta and Google, how their performance, like, just to validate my own decision, but that's not going to matter because I'm much more bullish in terms of opportunity cost with Meta than I am with Google, and that's what it came down. It came down to opportunity cost. It came down to like, what do I think is, but if I did do that, I would have been winning, right? So, but the way that I see it is that my goals is to grow my portfolio with this secular trend as quickly as possible. And in my opinion, unless I'm using leverage, I don't think I'm going to get there with Google versus Meta. I think Meta has much more upside. I think that Reality Labs will be a profitable business soon, not soon, sorry, in a few years. And I think when it does, it's probably going to be a $3 trillion company, which is almost double where it is right now. And I don't think Google is going to double in a few years. It's very hard to say that they will unless they figure out some sort of medium to utilize advertising in its search, which they might have today by that headline. But at the same time, that hasn't happened yet, right? So I'm not trying to discourage people from owning Google because I am still like bullish from a long-term perspective with Google. But for me, it is opportunity cost and meeting my own goals of what I want to attain to when I retire. And I think everyone's going to be different in that.
Do you think search is dead?
No, not at all. I think Google is going to figure out a way, like they always do. They've been around for over 20 years. They're going to figure out a way, and they're going to come back on top. There's a lot of fun with Google, to be honest. I mean, it's seeing it up like 4% today is no surprise.
But you've had Google for a while, right? So it probably took you a minute.
Yeah, I started buying them in 2023. And then I played leaps on them and so on. But yeah, I officially sold out of Google at 157 and I bought Meta at 220. No, sorry, not 220, 624. So I think that's like probably about even now since Google's pumped today. I would not be surprised if in the short term, Google does outperform Meta. But I think from a long-term perspective, I think Meta is going to be just fine. And Meta has advertising. They're a walled garden. They're not impacted by search. They also have their hardware. Equipment in Reality Labs, and on top of that, I would say their margins are pretty on par with Google, but they're growing a bit faster on those metrics. So, for me, I think the better deal was Meta, preferably below 500. But I mean, what can I say?
But Amazon is the big one that you think is like your core bet over the next decade.
It's my core bet, but ironically, Mercado Libre might take my number one position soon. I think it's a few percentages away from Amazon. Nubank is taking that second largest position again as of today. It was Mercado Libre, but Nubank, I'm very surprised they came back, right? I thought I made a post on Twitter. I was like, oh man, Nubank's gonna go back down to $10, like just after that earnings, which is great, but the margin compression, Wall Street hates that stuff, right? But I knew I was gonna hold. And then here it is. It's back.
Okay, so last question I got for you, Sam. Again, at Sam's Twitter, we got you're over 9,000 now. So thank you to everyone who's been following Sam.
No way! Nice, thanks everyone.
Yes, sir. Thank you for being a contributor. We gotta get you
Holy
on,
cow!
Hopefully every other week. We gotta get more of your thoughts here.
Yeah, I'm back from vacation, so it might happen, right?
Perfect. I love it. Last question for you. What the hell is Jerome Powell going to do? And what are your thoughts currently on the macro, interest rates, inflation, all that stuff?
We got PPI tomorrow. I damn near thought the market was going to price in a rate cut in June after that cool CPI report. So I don't know, man. I have to be honest. I don't know what's happening with rates. I don't know why rates keep on rallying from here. And meanwhile, the market has bounced back tremendously. I don't know. I can't explain what's happening. I can certainly make a thesis on what's happening, but I think the market thinks that even though tariffs are off the table, they still are materially higher than before. And they don't think the government, or they don't think Bissett or the administration is going to meet their promise in terms of dropping rates down. And I think this is the market kind of saying that, which is it's hard to be bullish bonds right now, but it just seems like the right thing to do right now. And I do have a bullish bonds position.
Via TLT, I would imagine.
Yeah, I have TLT spreads right now.
So you think yields are topping? You think they have to come down?
I think they have to come down. Otherwise, the market's going to fall. Like there's always like that choking point with yields where the market's like, oh, I'm cool with this. I'm cool with this. And like it gets up to 4.3% for the 10-year. It's like, oh, I mean, that sucks, but I'm still cool with this. I'm cool with it. 4.5%. It's like, whoa, hold on. This is getting a little toppy here. And like around 4.7% is when the market starts noticing. So I'm keeping my eye on those yields. However, we got PPI tomorrow. And I think PCE is next week. I forgot when PCE is. Yeah. So we'll see. We'll see.
All right. So overall, I mean, you did not panic when we had that dip. Bought the dip, you stayed the course.
I panicked in here. Man. Buying that Sunday night was one of the scariest things I've done.
I agree with you as well. I mean, it was gut wrenching, but I think most of retail, and we see it in the data, just said, forget it. We're buying the dip.
Yeah.
You still think the rest of the year should play out in a rather bullish way?
I think we're gonna hit something close to 7,000 S&P 500 because you have that slingshot effect, right? Like it pulled back, the slingshot came back, and like you're letting go, and that's what we're seeing right now. Like people expect the market to pull back right now, but what if it doesn't? What if we just melt up from here? Not a straight line up, but I don't know, man. Like Bitcoin 150K, S&P 500 7,000, Tom Lee style. We're heading there.
Yeah, and I wrote this post on Twitter quickly today, but I think there's like 3 core reasons to sell. A, you think there's no rate cuts coming at all. The markets are getting euphoric. And then finally, it's healthy to take some profits. Reasons not to sell: more trade deals on the way, bullish. Inflation's coming down, bullish, which will inevitably affect rates. AI investment only accelerating based on everything we saw from the Saudis yesterday. And then finally, the Toots missed it, and they might push us up higher.
The what? Toots?
Yeah, the institutions. Yeah.
Oh,
I call
that's
them
a funny one. Honestly, man, I think that's the one thing that kind of made me like get a bit more bullish was because you saw those institutions, they were downgrading their S&P targets by 30%, right? And it's just after one after the other, downgrade. And then a recession was like 70, 80%. It was getting very bad, right? People were looking at those bear charts and it's like, oh, we're going to visit those low 4,000s, right? And then now they're all revising their target. Goldman Sachs rising their targets again. It's like, okay, well, they're not gonna look like idiots again, right? By downgrading their targets very quickly and then now bringing it back up. I think they're gonna keep them up here, and I think you got a lot of people who are still in cash who have no choice but to buy right now, or at least waiting to buy, which is going to continue the melt up.
I would agree. There you go. Sam Solid. Appreciate you taking the hour. We'll hopefully get you on in a couple weeks again. Get your thoughts on the market.
Sure.
On Twitter. And we'll see you next time.
All right. Take care.
Thank you, Sam. Appreciate it. All right. There you go. So for those that are just joining, you can tune back in. We talked about NEBIUS, Robinhood, HIMS, Amazon, Google, Tesla, a bunch of these different positions. The main point of discussion was NEBIUS doing a deep dive on that company in the data center space. And look, it's an interesting company. I've got to do a lot more research on them, go through their financials as well. I do think at $8 billion, with half of the stock trading in cash, up right here about 5% after hours. I always like companies that have a reasonable understanding of where their growth trajectory is coming from, and they have a lot of cash on the balance sheet, because that just means A, they're going to either do buybacks, or B, they're going to invest that cash in a strategic way. So it's definitely an attractive setup. I'll go through deeper of the financials and try to see what's going on there, but it's also up a lot in the past basically month and a half from the April lows. So right here, I think a lot of things are up right now. If you buy anything, you just got to be ready for it to take a bit of a pullback, because we might just have a general market pullback given how much momentum we've seen. Tesla right here at 347. I mean, NVIDIA after hours getting a little bit of a pump, 135.70. Why is NVIDIA up right now? CoreWeave apparently had a really good earnings, and that's why CoreWeave is getting some love. They beat on revenues by about 100 million. They're doing almost $1 billion of revenue, which is incredible. CoreWeave was up 12%. Now it's up 3%. So a lot of that rally getting faded right here. The call is going on. So maybe they're saying some stuff that people are selling into from hearing the call, but they were up another 7% on the day. And then NEBIUS, because of CoreWeave, is a derivative data center play. They are also up 5% based on CoreWeave. So a lot of these names, I think if you take a shot at HIMS or Hood or Palantir, Tesla or NVIDIA, any of these names, they could easily see a pullback just given the momentum we've had since the middle of April. But I also agree with Sam that towards the end of the year, it looks like this is a market that has a shot to really go a lot higher. Palantir right here closed 130.18 on the day, 129.58 after hours, but we did get that 130 close on the day. So there you go. Not too bad. Dix is acquiring Foot Locker. Really? That's a big one. Foot Locker. Wow. 60% after hours. Interesting. Getting some consolidation in the retail space, huh? Dix and Foot Locker. $24 a share, 2.3 billion. Stock was $12 a share. It's at 20 right now. So it's up 60%. It was down 3% on the day. I would love to see the option flows on Foot Locker, and who the hell knew this was happening, because there had to be someone that knew this was happening. $1.2 billion market cap. They're getting acquired at $2.3 billion. I have not gone to Foot Locker in a long time. Granted, I don't really buy shoes that often, but it's still a relevant brand that is in every, at least American mall. Is Foot Locker international? Is anyone in Europe or Asia? Do you guys see Foot Locker? I think it's a bit more domestic, but 2.3 billion. There you go. Dix is acquiring them. Dix is a public company. DKS is their ticker. They are down 7%. This is normal. Every time a company issues a ton of cash to buy another company, they tend to see a little bit of a drop off in their share price. So you got Dix right here down about 7%, but Foot Locker up 62% currently right now. We have it in the UK. Okay, so it is international. It's in Germany. Wow, it's in Germany, Canada, Australia, the UK. It's in Asia. I didn't know they were this international, dude. I really didn't. Portugal is not big, but we can see it in some of our big cities. Yes, Germany, Foot Locker is still common. Wow. Okay, so here's the next question. Who shops at Foot Locker a couple times a year? Like, do you guys meaningfully go to Foot Locker when you need new sneakers or clothes? I know they sell Nike. That's kind of their core brand. Israel, Belgium, Canada. Wow, I did not know that. I thought it was more of just a American brand right here. Same in Sweden. Dix, I feel like is more international just because they sell so many more things. But Foot Locker, I've known as just purely shoes and like hats and t-shirts and hoodies and sweatpants. But looks like this is more of a international brand. I go every weekend for my son's Jays. I love it. Good deals on Black Friday. That is also fair. I can't remember the last time I went. Can't remember. Never. Usually teens or young adults. Yeah, when I was a teenager, I think I went more often. I don't know. Now as an adult, I don't really go to Foot Locker like that. Someone said Foot Lockers is pricey here in Spain. What is a mall? That's a good question. All right. Well, there you go. That's an acquisition. Mergers and acquisitions are back. IPOs are back. I think it's actually healthy to see some of this consolidation. Probably good to keep the overall economy in check. You don't want a company like Foot Locker that can't survive as a public company being a public company, right? Because then shareholders are not getting any shareholder value. The employees might end up getting laid off if Foot Locker doesn't have the ability to subsidize their wages. So from that perspective, if you have a bigger incumbent that can swallow them up, you just have a better chance of those jobs staying in place and then eventually shareholder value coming for A, the shareholders that own the stock that's getting acquired, but B, the company that is doing the acquisition. Yeah, it's a great sign for the economy. It's also like the fact that Dix is saying, "Hey, we are willing to put up 2.3 billion, and we're not scared to, because they could do a lot of stuff with that money." But the fact that they're willing to acquire another company, that is also not the worst sign in the world either. We do have Foot Locker in Greece. Wow, dude, I did not know it was that international, dude. I really thought it was just an American brand here. And I've traveled a decent bit across the world. I've been to malls. I've never really seen a Foot Locker. I definitely don't think it's India. I don't think I've seen a Foot Locker in India. But there's a lot of competition for sneakers in India. Oh wow, they are in India. There you go. Foot Locker, the heart of sneakers in New Delhi. That's the capital of India. Wow. I've never seen it. This is a really global brand. Then I did not know that. It's definitely a global brand. Forget Foot Locker, AK Media is international. Well, we get to be international because all of you across the world get to enjoy the stream and tune in every day. So I deeply, deeply appreciate everyone tuning into the stream. Warren, thank you for the super chat. SMCI is back a lot. My cost basis is 54. It is nice to see SMCI get some momentum. 45 right here, up 15% of the day. That $20 billion deal with the Saudis was very bullish for this company in particular and for the overall GPU data center space. And as a result, you're seeing CoreWeave, NEBIUS, and then obviously NVIDIA, 135.90 after hours. NVIDIA, just an epic 20% tear this week. It would be really nice to see if we can close above that 135 on Friday. So very nice to see some of this momentum on these big tech stocks. 2.3 billion. 2.3 billion. They acquired them for 2.3 billion. Yeah, Dubai, Switzerland. I guess this company definitely was a bit more global. All right, cool. That is it for me today. Not the craziest day of earnings. We do have NVIDIA coming up in a couple weeks. That's going to be a very big one. Boston meetup. Again, let me put the link right here in the chat. I will probably send out details for the Boston meetup on Saturday. So working out through some of the details, make sure to check your email. But if you want to sign up, May 24th, we will be live for the Boston meetup. Again, probably more of a smaller meetup, nothing too crazy. But it's 10 days away. I'll be FSDing all the way to Boston. So excited to do that. And then Grab, great day for Grab right here. 525, 521 after hours, but we got that $5 close, which is nice to see. And then Palantir also got the 130 close, which was very nice. 129.82 after hours. Robinhood took a little bit of a breather today, 61.39, down about 2%. And then Tessie up 4%, 347, did hit 350. Currently right now, 347. The S&P was basically flat, 587, up about 0.13% on the day. Steve is not going to join. Steve just texted me. He's got some meetings tomorrow, or probably not tomorrow, but Friday. He tends to join on the Friday close, so we'll get him on Friday. And then we'll get more of the thoughts that he has. I was on the phone with Steve last night, and we were talking about bank valuations because we were trying to better understand kind of what's going on with SoFi, their tech platform, all that stuff. So we were looking a little bit more into that stuff. So I'm sure he'll talk about that. Target, he wants to talk about. I know a lot of you guys are curious about that. He's definitely annoyed at Palantir as always. That was a fun conversation last night. But, you know, it is what it is. He was like, am I stupid? Or I was like, no, you're not stupid. It's just the market loves Palantir. It's like, I don't know what to tell you, dude. I don't know what to tell you. And then on NVIDIA, you know, he has these 128 cover calls on NVIDIA, which obviously are underwater right now at 135. It's just, he wrote them at 117, did not expect an $11 move within basically 48 hours. But I think he forgot, and I forgot. I didn't have cover calls, but I didn't even know that the Saudi meeting was happening. And I didn't know Jensen was going to be at that meeting. And I didn't know they were going to say, hey, you can sell all the AI chips you want. And if you knew that stuff, you probably wouldn't sell covered calls this week. Because this is kind of like an earnings reaction off just headlines this week. Now, we got to see how good the earnings are. Maybe the earnings are somewhat bearish, and that could take NVIDIA back down. But the momentum is behind NVIDIA's side right now. It's almost like everyone's waking up and realizing, wait a second, this AI thing is happening. And as a result, they are a lot more excited about NVIDIA. Call Jensen one day. One day we'll have to call Jensen. We'll have to do that. Foot Locker is getting acquired by Dick's. They are getting acquired, and that's why that stock is up 62% currently right now. All right, cool. That's it for me. Daily recap will be out in a couple hours. Thank you all for joining. We'll be back on the market open tomorrow. We will keep going from there. And yeah, we will keep it moving and keep analyzing the markets every single day in the morning and in the afternoon. Thank you to all the new subscribers as well. I know a lot of you guys are new here and you've kind of just been discovering the channel. So yeah, welcome to the community. It's what we do every day. Talk about stocks, the market. We have a very I don't know what the word is to describe the chat, but it's a hell of a chat. I guess we'll just say intriguing chat, interesting chat, hilarious chat. Bullying is another word for the chat, you know, but but I can take it, so that's all right. But we got a fun chat, fun community, and we've obviously hit some milestones this week in terms of the broader markets, which is pretty nice to see across everyone's portfolio. All right, thank you, everybody. Appreciate it. I'll see you guys tomorrow on the market open. And as soon as I'm about to end off, chat says, I don't, but this is the person who finds a way to make sure he bullies. So shout out to Chad, but Chad's bullying is always with a bit of love right here. Dude, it was so funny when I was like, oh, Delo's a Uruguayan company. It's from Uruguay. I didn't want to say it, but I knew, because I was pulling up the charts and I was trying to see the earnings, but I knew in the depths of my soul, the next comment, as soon as I said, oh, they're from Uruguay, would be, hey, Amit, you're a gay. Like, I knew it. And go back and watch the chat preview. I think the next 3 comments were, oh, you're a gay, Amit. Oh, Amit, you're a gay. It's like I knew that was going to happen. I knew it. I just knew it. And I didn't want to be too predictable and say it. But obviously that was going to be the case. And I think that is emblematic of this chat. That is absolutely emblematic of this chat. All right, I'm out. Thank you, everybody, for being here. We'll be back tomorrow on the Market Open. Bye, everybody. Have a good one.